Hey guys, Darren here. Thanks for joining the Stock Options Market Weekly Update for the week of October 23rd, 2023. We're going to talk about what's going on in the market, interest rates, economic reports that are coming out this week, and then we're going to go through the different sectors and see what's performing well and has performed well. And we are going to go through each of the trades on the option trading platform and talk about what we're doing this coming week. I think it's super important that we understand the ways that the rich are getting richer and the tools that they're using, such as options, so that we can do the same and profit as well in any market. I promise we're going to dig into many detailed option trading tips and tricks. So if you have not subscribed already, please do that now so you are informed of future videos coming out, and make sure to hit that like button. Do me a favor. If you appreciate what goes into making these videos, I'd really appreciate it if you hit that like button so we can get the video out to as many people as possible. Also, be sure and download the free options workshop in the link below. It's absolutely free, and it talks about the benefits of trading options over buying stocks outright. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your homework. If you are new to options, I recommend you start small. All right, guys, we started the week with the SPX, which is the S&P 500 at 43.45 over here, and we ended up down at 42. Well, there's 42.24 and shown here on the graph, 42.24. So down a big 2.7% for the week. So really had a down week last week. We're still up overall for the year to date. If we click down here and change the graph, we're still up. I've got some notes in here, but we are up around 9.4% year to date. We started the year at 38.24 over here, and we are up to the 42.24 where we are today. So forward PE is 17.7. The 10-year average for PE, price to earnings, is 17.5. So stocks are, fairly well priced right now, just about average. Fed Chair Powell, Jerome Powell, spoke last week, and he said Thursday that the bond yields could help the Fed slow the economy. So rather than having to raise interest rates, it looks like the higher bond rates, he's saying, are going to do the job by themselves. The job market, economic growth, and consumer spending have all been steady despite the 11 rate hikes, and he said that the inflation gauge with the PCE number, personal consumption expenditures, rising 3.9% for the 12 months ended in August, was actually the lowest annual increase that the index has seen in 2 years. So inflation is slowing, is basically what he's saying. We're not yet at the 2% inflation target, but we're headed that direction. So that's all pretty good news on the economic front. And that shows that he will not need to raise interest rates going forward for some time. If you look at all these numbers from December, there's still 5.25 to 5.5 expected. January, still the highest percentage of 5.25 to 5.5. So keeping things where they are all the way through May, 5.25. June, actually June is where it would be the anticipated first cut in June of next year. So midway through next year, a 1/4 point cut, there's a 40% chance. So we've still got the rates where they're at, a little bit, I guess, average to a little bit higher than normal through the middle part of next year. The economic calendar coming up for this coming week, really that PCE number is going to come out on Friday, and that is I guess the biggest one that we would be looking for on Friday. And then as far as the earnings, let's see if this is the FactSet Earnings Insight report, and you can see for Q3 earnings decline was minus 0.4%. So not too bad, and this confirms the PEs of 17.7 versus the 10-year average of 17.5. And then if we go to page 15 on this report, we can see that for Q4, they're projecting earnings growth of 6.7% and revenue growth of 3.9%. So that's actually pretty good. Picking up for this last quarter, it's expected to be pretty good. And then for calendar year 2024, earnings growth of 12%, 12.2, and 5.6. So that's actually really good as well. And then if we go near the end of this report, I like to look at the PEs, price to earnings, and you can see energy is still a good buy, 11.6 versus 15.6. And energy, I mean, that's my favorite sector right now, definitely. And then we've also got utilities that are a good buy still at 14.9 versus 17. Consumer staples as well. I like those. Have not seen the price growth like some of the other sectors. So that is a good buy, and I've actually long the Dow and some of the consumer staples as well. If we looked at the different sectors, just over the last week, the 5-day, you can see we were down 2.7%. So everything was down. The only thing that really held up was the consumer staples and the energy, which we just talked about as being good buys. And I like both of those sectors. I also like healthcare, and it was only down 1%. Year to date, communication services. So these are like you can see Meta, Google, Netflix, all those tech communications stocks are up big this year, 38%. Consumer discretionary, XLY, you'll see when we go through the trades here in a minute that I've been shorting that. I've been selling call credit spreads, hoping that it would go down, and we've done well with that, doing that because it was up big. And I mean, with interest rates higher for longer and student loans coming due, I think people are going to curtail their spending on the discretionary items or items that they don't necessarily need. Technology is up big. Real estate is down. That's kind of where we are right now, year to date. So let's go ahead and jump into some of the trades. All right, let's start out with /6J. This is the Japanese yen, and we're in this trade just because it's at all-time lows. We want to go to the 1-year chart and daily, and then you can see that it's way down here at lows. So I've just been long with a credit spread. We placed this and we're up big. Actually, there's nothing left in it. Maybe because we're off the market right now, but yeah, there's not quite. We're still above our range at 0.0067 versus our short strike is 0.0067 as well. This is 673, so we're just above it. If we go to the curve mode on the trade tab and analysis, you can see here's where the stock is today, and we keep the full amount collected as long as that $175, as long as we stay above that range. But we're already at low, so I'm not too worried about it. As we get closer, there's 12 days left. So in the next few days, probably next week, I'll either close this out, and since we're still at lows, I'll probably just put on another trade. So in other words, roll this or close it out and put on the new trade, but it's going to be at the same price, so it's the same as rolling it. Oil has done well for us. Same thing. We're at lows in oil. Well, actually, we're not. No, we've gone up. We're at 88 now. We were down in the, anything below $70 a barrel, I was going to be long. But now with the war in Ukraine and, Gaza and the fact that we're not pumping oil and that we're not energy independent anymore, I think oil has a big chance, especially with the wars, that it could even go higher. So anywhere in the 80s, I'm probably going to stay long, or I know I will. But this is a debit spread that I put on. So It is also a long play. I didn't sell a call spread like I normally would. I bought a debit spread and then I sold a put spread. But you can see on the curve mode, we're at 88. We would make another. You can see P&L at expiration, $1,190 to make in this trade. We're profitable all the way down to the 86 range, and we're at 88 now. So I really like, and I've got 3 sets on. So, and here's the $1,000 left that we can make on top of our 181 that we've made so far. 24 days to expiration. So I'm going to stay a long while. Advanced Auto Parts. This is at Lowe's, and they've got good fundamentals. If you go to right here on Tasty Trade, you can go right here to the research and look at the financials, and then you can go over here. Not letting me do it, but you can look at the financials and see they're in great shape. They are at all-time lows, and we are profitable as long as the stock stays above our short strikes. And we are currently at 55.50. The stock's at 51, so we are a little bit below our short strikes right now. Here we go. So we're at 51. We're profitable down to around 52 and a half, but I'll just roll this to the next month if we don't come up here shortly. But you can see, yeah, we're total P&L, we're down about $144. Oh, actually, we're zero year to date. We made 144 here, and we're down 144 here. But again, I like Advanced Auto Parts long. Apple 175 put spread. I like Apple at these levels. And we are approaching that 200-day. The red line is the 200-day moving average. The yellow line is the 50-day. And we are down approaching the 200. So there is typically support at that 200-day moving average. So I like to turn and get long this for that reason. And that is the reason that I put on a put spread, sold the $5 wide, and what did we collect? We collected $1.66, so just about 1/3 the width of the strike is what we want to collect when we place a put credit spread. Adobe, this one is, I'm finding, a tough stock to trade. It's a great company, but right now I need to get out. I need to pin that 550 strike. And that's, my profit range is very tight here. I like that level. I think that's about where the stock should be, but I'm just too tight. So I'm going to probably pull out of that. We are just, we've had a tough time in there. So we need to close that out. I probably won't trade Adobe anytime soon unless it's directional and it's at very, high levels or low levels. AMD, where are we with AMD? We've been selling puts. If we look at the levels of AMD, I've got all these different levels, but I do like AMD at this level and to be long. And what I did, I kind of experimented last week. I normally only buy or only sell options, but last week I actually bought options. And if you look, over the last year we haven't made a lot in AMD, $324, but you can see last week I started playing the different levels here. If we go to the 2-day chart, you can kind of just see what I did on Friday. We go to the 2-day and then the 3-minute, and I kind of put this together to show you what I'm playing with, and I'll end up doing a video on this, but I'm playing the different levels. So even though I'm long and I'm selling, so you can see I've got a 105-100 put spread on, and so I'll roll that to December if it doesn't come back above the 105 because I like it long. But I'm buying right here I've got the 5-day 102 call. So I'm expecting it to go above 102 next week. And if you look at the chart and what I did, I kind of tracked what I did, but I bought a call down here at 103, and then I sold it up here, the same 103 call. And this was on so if you look just on the 19th, we made $68 here. We bought the 103 and then we sold the 103 and we made $68. Then we bought the 101 call and sold it for $275 for $110. Here, I just got out quickly since it was 0 DTE and we were even. I wanted to get out before that quickly expired throughout the day on Friday. And then I opened up the 102 I paid $283 for it to be above 102 next week. So I had pretty good success buying low and selling high. Here again, I bought and then sold again up here, and then bought again down here, and then that's what I'm waiting for. This is the 102 7-day, and then we just want it to move up throughout the week. So I'll do a video and let you guys know how we do on that. But typically I haven't been buying options in the short term, but I'm experimenting with doing that with different levels. But if we can do that in the short term, and then we swing trade by selling options in the monthly options, and then stocks like Verizon that have big dividends, I'm just going to look to accumulate those over time. Medical properties, it's been down, but just accumulate shares. It's got a big dividend, just like Verizon. And then those are long-term type plays. So we've got long-term, mid-term, and short-term, and that's kind of my strategy in learning to do the level trading by buying short-term, anywhere from 2 or 3 days to weekly options. So moving on, Amazon. If we look at the chart in Amazon, it's down. Well, we want to go to the yearly and look where it is and daily, and we can see it moved down and it's approaching its 200-day moving average support level as well. So stocks are kind of fairly priced right now. We've got Iron Condor on that we moved down the call spread to right at the 140 level, and it's now an iron fly. And then we've got a 115, 110, $5 Y or put spread that we're up on as well. So we do need the stock to move up from where it is at the 125 to 132. We start to be profitable, and anywhere above that is all profit, especially in this range right here around 140, right where that iron fly is centered. So we're in decent shape on Amazon. I'm not too worried about it. I'll just roll to the next month and wait until it moves up. Amazon's a monster, and they're going to continue to do well. So I'll always be pretty long Amazon. Boeing was another one that I put on last week, a new one. We've got these wars going on. They've got commercial aircraft, but they also have a defense space, so it's a defense play as well. And they are down below low at the 180 range. So, to me, that's a buy or selling put spreads for premium. And you could collect on the $10 wide by going that low. We were able to collect quite a bit of premium. We've got $268 left to make, because we are down 43. It did drop a little last week after I put it on. Bank of America, I've got leaps on these. I'm not going to talk about the bank stocks. They're long-term plays, 453 days out. They are down right now, but long-term, I'm confident they're going to move up. And you can see when they do move up, we will continue to make money. So that's the plan with the bank stocks, but I'd like to have those on for diversification. Caterpillar, put that on. Iron Condor could go pretty wide 240 to 280 range. It had a big drop after earnings, I believe, and that's what signaled me to put it on. And you can see the 89 IV rank. So that allows you to collect a lot of premium and go wider. And you can see these support and resistance levels at 280 and 210 range. And we are profitable, anywhere 235 to 285. And I wanted to be a little bit leaning long, which we are here, and we're right in the middle of that profit range with 26 days to go, and then we can make a whopping $343 left in CAT. So I like that trade. Chewy, 17.5 put. This is another one that is down, and that's why I am long. And if we look at just the 30-day chain, that's not too promising, down 106. Some of these things change over the week, but I think, long term, we've done okay, not great. Yeah, we're almost break even. Not too impressive. But Chewy is down, and I've been long, so even though it's down, not losing money is big. And I think long term, it's going to be a great stock. Good financials, good fundamentals moving forward, and everything is online. So I think it's a great play long. Costco, the behemoth, a monster, 555, 530. I've got a $20 wide iron condor, somewhat tight range, 26 days left, but we did drop recently down to 552. So I am leaning a little bit long, but we've got a lot of profit to make here, 771, and IVR is high. So I'm not too worried about Costco. I think we're going to be in pretty good shape there. Chevron, CVX. This one we're long. It was down Friday, $2.23. Oil's down. I don't understand how, but definitely long. Chevron, they're a great stock. Anywhere above 162 we make money. We're at 166 now, so I think that's a good position. I've got 3 contracts on. Diamonds, the Dow Industrial, 337 to 340. We had a drop, last week, so we've got a fairly tight range on that. We need it to move up a little from where it's at. But again, I think the Dow stocks have been kind of beaten down, and they will come back. So that's why I am a little bit long. But you're down here at 331. And DraftKings, we've done pretty well in. I've got 2 leaps options and 1 call against it. I actually sold one on a down day last week, the call. So I think we've done okay in there. Yeah, $800 over the last year, and just in the last 30 days, we've done $377. So doing pretty well in DraftKings. It's been trading in that range, anywhere from 27 to 30, up to here all the way to 33, and then we've got support down here, 24. But it's been trading in a range, and I like it long term, and it's got good IVR at 44. So. They're dominant in the online gambling space, and more states are being approved. So I like DraftKings definitely long. Gold being a small gold stock. I'm not going to talk too much about that. Lennar Home Builder. The Home Builders got hit last week, but we're still within we've got a $5 wide iron condor on. Our short strikes are 100 and 115. And we make money when we stay in between those ranges, and we are right here at 103.76, so we're in between our range. We're in pretty good shape there on Lennar. And if we look at the 30 day, yeah, we're just up a little bit, $34. Lockheed Martin, with the war going on, Lockheed has a lot of equipment and systems and software for military applications. So I am long Lockheed, and we've got the trade on. We make money anywhere above this 335 level. It's at 444, and we've got a $10 wide put spread that we collected $235 up front for placing. And if we look at the stock where it is today, it's right at that moving average. So I expect it to do well over the next year or two, and then definitely long Lockheed Martin. Lululemon has been a little bit, it's a tough one to trade. It can be a tough one to trade. It moves a lot, and you can see just last week it was up at 419 and then dropped down, and we're at 395 right now. When it did move up big last week, I sold this 440, 450 call spread, and already we're up, 150 bucks. I've got 180 left to make on that call spread. So that brought me up because I was at 380 iron condor level, and now we're profitable right here. But we definitely helped our position on that big move up when I sold the call spread against it. And I think we'll come out of that okay, but again, Lulu is a tough one to trade. You've almost got to do it directionally because it is pretty non-liquid sometimes. Meta is a 340, 350 call spread. Again, that was up big year to date, and that, when it was up at these levels, I put on a call spread, and we've done okay in Meta. Let's see. The next one, MPW, Medical Properties. I own the stock outright, 400 shares. They've really been hurt. They're down to $4.70. It's that medical health property REIT, but I think they're going to be okay long term, and they do pay a dividend, so that's a long term play. Nike, 95 to 105, $5 wide iron condor, and we are right in the middle of that range right here. And they've moved up and down. They are below their 200-day moving average. So some of the situation with China is, I believe, why Nike is down. But long term, they're going to do well. And I was able to collect good premium when I put that trade on initially. So we'll look to probably close that out. IVR is down to 14. So once we get to that 10 to 15 range, hopefully we're still within that 95 to 105 profit zone where we are today, and then we'll collect most of that 166 that's left in the trade. Oracle, another one that's a little bit tough to trade, 105 to 115. We're a little bit below where we need to be, but we're close. And Oracle is a good long-term stock, and it's been down. It's down below now the 200-day moving average. Palantir. All right, this was another one that I bought options on last week and have been playing with. So I'll do a video on this, and this is a short-term, 1 week play. Although long-term, I've got the Leaps option that we bought and a call that we sold against it. So that's a poor man's covered call. And definitely like the stock long-term, and you can see we make money as the stock price increases. We're only $1 off being profitable. 16, we need to be at 17. And you can see it's traded within a range from 14 to 20, and it's been trading pretty steadily in that range over time. So Palantir has been a good one for us. Let's see, where are we? One I wanted to highlight real quick. Actually, if we go to the 180 days, let me see what we've done in the past, 6 months. Yeah, only $184, not too impressive, but we should do better as it continues to improve. Netflix had a big move last week, and I just want to show you it. We did put on an earnings trade last week in Netflix. Let's see. We've made $3,000 over the last 6 months just in Netflix alone. But you can see right here on 10/18 we sold the put spread $10 wide for $1.82, and then we closed it for a penny later at the next day. So we put it on the 18th, and then we closed it on the 19th when the market opened. But made $181 right here. But we've done really well in Netflix. I like trading Netflix. Like some of the others that are more difficult to trade, when you find a stock that you do well in, Netflix is one. It's liquid, and it's a good one to trade, definitely. PR is one that I'm looking at. One of the guys came up with looking at that as a potential. It's an oil stock and the potential acquisition, and that's why I'm looking at Monday. I put this on below the market, buying a Leaps, a $10 Leaps, 453 days out for $4.10. The market price is $6.10, but I don't want it to. I want to see where it opens, and then I'll adjust my price and buy a Leaps in Permian Resources, which is a good oil stock, smaller, but they're expected to do well and could be acquired as well. SoFi is another long-term play. You know, I like the fintech stock. We've got shares and we've got a lot of Leaps, and it was down last week. It's below $8. And you should have some SoFi in your portfolio, either Leaps or buy the stock outright. It's pretty inexpensive right now at $7 range. So for 100 shares, you know, $737. But it's going to be a monster going forward over the next several years. So I'm just looking to accumulate shares. SOXL is the semiconductor stock. It's a ETF, and I've got puts and calls, so I've got a strangle anywhere between this range between 15 and 25. We're at 16, so I'm tilted to the upside, which is good because it is down right now, and I expect it to stay in that range. So I think we'll do okay in the semiconductor ETF, SOXL, going forward. SPY, I just threw on, we've got high IVR, so we've got a $5 wide, 410 to 446 iron condor, and SPY does not typically move a lot, and that's why I like to always have, you know, an iron condor on. TDOC, TDOC, we've got a Leaps and 2 calls that we sold against it, and we've done pretty well in TDOC over the last year. Let's see where we are. You know, if we go to the 365 chain, yeah, I mean close to $500 over the last year. So we were up more, but it looks like it's had a drop quite a bit. But that's why we have calls that we sell against our Leaps, and then we're able to profit on those. But TDOC long term is going to be a good stock. The chart shows that they're way down below their 200-day moving average, and it's healthcare, and they've acquired a lot of companies, and it's virtual as well. A lot of these companies are virtual. Toll Brothers, real estate. So I like to be diversified and have some different stocks on. This one's still trading within the range. We've got a $5 wide iron condor on within the range, good IVR. So we will look to continue to pull in some of that premium. We're up 47, and we've got 98 left to go on that. And then we've got Tesla. I think Tesla was down last week. It's at 211 now, and yeah, it was down big. Musk spoke, and there were earnings, and it dropped. So, so I have an iron condor on. At some point, I'm going to get long Tesla. Just don't want to catch a falling knife on the way down. Visa, they've been around forever. They're going to do well in the higher interest rate environment, you know, for the next year easily, and they're a behemoth. I'm going to continue to sell put spreads and collect premium in Visa, and you can see on the chart, yeah, exactly. They're just above their 200-day, but to me, that's kind of an easy premium collecting type stock. Verizon, I mentioned, I'm going to look to accumulate more shares of Verizon, big dividend, long-term play. Wells, long-term play. I've got Leaps options with 2 calls against it, so poor man's covered call, long Wells Fargo, and chart doesn't look right there. XLY was that consumer discretionary that we talked about. We're up 144. We've done pretty well now in XLY just over the last 60 days. I think we've made $370 in XLY just trading in these call credit spreads and seeing the consumer discretionary spending come down, and you can see the trend here coming down, lower lows. When you're trending up, you're getting higher highs, and then when you're trending down, you're getting lower lows. So I've been playing that to the downside. And then the last one, Exxon Mobil, again, oil stocks, my feeling on that, they're expected to move up anywhere, above the one, where's our short put? Our short put in XOM is at 110, we're at 111 now. But any further big drop in XOM, I'll throw on some more put credit spreads and get long, since IVR is at 49. So, all right, that's it for the going through the trades. All right, guys, we've got a lot of good earnings coming out this week. Remember to hit like and subscribe down below. I appreciate it. Remember to download the free options workshop if you haven't done that already. Share the video with a friend. Let me know in the comments below any questions that you have on any of the trades, any of the stocks, and let me know what you're trading. Thanks for watching. See you in the next one.